Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Tuesday edition of Benzinga's Pre-Market Prep. Spencer Israel here with Joel Elconin and Dennis Dick. On today's show, more of the same from yesterday. We are in rally mode here again this morning. There are still more cases and deaths both going up in the U.S., but we're going to talk about why the market does not seem to really care about that, at least right now, and what that can mean going forward here. Our guest is Nick Shaheen, author of Create Income with Option Spreads. He will join the show at 8:35, as he does every other Tuesday. In the meantime, I will throw it to Joel here, and Joel, update us here on what has happened in the overnight session.
There's going to be follow through from yesterday's rally, folks. Technically based rally yesterday. You had a roof on the market at that 2640 area. We took it out, the strong buying balances, and the algos went to work overnight, and they just buy. No resistance in here. Pre-market had a little dip, 2623.50. That was pretty far away from any of my long entry orders. Sprinted at 27.45. Nothing up there for you, folks. March 12th high is 27.62, and then the 50% retracement. We talked about it yesterday. Who'd thunk it would be here today? That's at 27.86, and that also fits in with the average daily range too. So that's your target on the upside. Crude quiet session, up 21 cents, tried to rally, got to 27.24, turned back, now heading towards the low of the session. Not much support until you get down to yesterday's low in crude. That's 25.28. Gold, 7-year high, got to 1742.60. Pulled back off that level and had a $50 drop. Still up $9.20 though at 1703.10. Bitcoin is up $110, 74.40, and silver up a smart 3.11% at 1564. Triple D. Can you believe this rally?
Yes. Yes. You know why? You got everybody caught short. Everybody caught short. And I was thinking about this yesterday morning. We talked on the show, and I felt like the rally was a little more for real because it was based, what I said, on health and not on the Fed. So it wasn't an artificial rally. It was actually based on the apex being closer than what everybody thought, including myself. And I said, I came in short and I was in trouble, like serious trouble. Like I was like probably going to lose some pretty good money today. But I turned around and I just started trading. I made some calls, and I was like, I got to get covered on this. I got a swing short SPY on. I was like, I got to cover that. I covered that at 257, I think, right around 257.5, right near the open. It was like 257, 257.5. I'm like, because I'm on the wrong side of this. And then I was scrambling around. I went to my invest portfolio. I started buying some preferred stocks that hadn't run yet. There was some preferreds that actually opened up too low, and some of them hadn't run. Obviously, your big guns, were running already, like the retail and stuff was really running. But there was some opportunities to turn it around quickly if you were quick. So I actually, unbelievably, it has to be one of my best trading days ever because I came in short and I ended up making money yesterday, like making a pretty good money, which is unbelievable from, to be short and the market goes up, 3.5% overnight. And then to make it green. I just had a really good trading day. I did some stuff like shorting Teladoc. I talked about it on the show. I shorted it right after we got done the show, just around like 9:10 in the pre-market. And I made 6 points on that. That was a huge help. Used the Zoom as an indicator. That helped on that one. But I mean, I just thought myself being caught short. I'm like, there's a lot of other people caught short. So what you saw all day yesterday was a big time squeeze, and you were seeing follow through here this morning with more squeeze. Again, we talked about this yesterday. I thought in the short term, I didn't think it was going to happen in 2 days, but I thought we could eventually get up to that 50% retracement. we're within striking distance of that now. It's unbelievable that we've come this far. I thought in the next week or two we could get to the 50% retracement. We're doing it in almost 24 hours. So 50% retracement on the SPY, Joel. Give us that number again.
278.66, and that correlates to 27.86 in the June S&P 500.
What's the overnight on the E-minis?
45, 27.45.
Okay.
So, yeah.
So you were what, about 30 points shy?
40
points shy.
Yeah.
It's within striking distance. I mean, it could happen today. Again, if you're buying stocks now, you better be picking, the right ones, because I'm not chasing anything that's run this far in 2 days. Yesterday morning, I didn't mind chasing a little bit at 257, 258 SPY. I was like, okay, I'll try. I bought Canadian Utilities, which is a Canadian company. I bought some preferred stocks in Canada that hadn't really come back that much yet. It lagged a bit. There were some preferred stocks that were lagging. I actually had a really good one, a day trade on this HT preferred stock, which is a small one, which opened up hardly at all, and ended up running. I made up about 25% on it, which is, for a day trade. I was in the trade about 30 minutes. So there was definitely some really good, well, it was a little bit more than that because I actually bought a pre-market, but there was some good trading opportunities on some stuff that actually didn't open that high. Some stuff opened up. Everything opened up.
Yep.
But some stuff didn't open up that much. And when you're short, I do my best trading. I find that I do my best trading. I don't know who, for everybody else, but I find I do my best trading when I'm in trouble. I find a way to get myself out of trouble somehow. And yesterday should have been a huge down day for me, and I end up green, so it felt like a pretty good day. I mean, I didn't make a ton of money. Some of these days I've really done really, really well, but I didn't lose a ton of money. And when you're short coming in and the market rallies up 3% overnight, you're like, or 3.5% overnight, you're like, whoa, this is going to be hard to get out of this mess. Somehow I traded myself out of the mess.
And Spencer, go ahead and pull up the daily here on the S&P. And I mean, you could see, we had the high on the 27th at 34.50. 2 days later, you hit 35.75, pulled back, and then you teased, you got up there again. But, this was like your third time up here. We also high at 25.75. So it was your fourth time up there. And, and you also have people that, say, okay, well, I'm going to get a shot this morning. We hit that resistance level. It's going to pull back a little bit off that resistance level, and then I'm going to get in. And you know what? You're not. I mean, and of course, anything can happen today. But, I mean, you just technically based. And you know what? The algos don't care about the fundamentals. I mean, they sensed, people were short. They sensed the levels, and they just go and they just buy. So it's, the
momentum swings are incredible. And when you get caught on the wrong side of it, it's ugly. When you get caught on the right side of it, it's awesome. But it's a great point you're making. An algorithmic driven market, the momentum, once it turns, scrambles. And think about how much, people, and even in mind, the long-term invest portfolio, it's not performing well, I tell you, when the market goes up. I mean, my trading account did very well. I scrambled myself out of trouble, but I'm still sitting, I bought 3, so it helps a little bit. I don't know. I haven't really analyzed my cash. I've bought about 8 to 9 stocks since this whole trouble began. We know I talked about the Microsoft buys. A Kroger I already sold out of because I thought I made 18% on that in 7 trading sessions. I thought that was good enough. And it's not the kind of stock that's going to rally, and drive us higher in this market. But I was scrambling around yesterday trying to find stuff that hadn't moved, and I was like digging in the preferreds a bit. Some of them hadn't moved yet. So there is some opportunities. You just got to be quick, and you got to really hunt right now. But I'd say at this point in time, I'm not looking really for buying stuff now. I think you get up there, there's 50% retracement. I think it's a tough level to get through. When you really analyze it from a fundamental basis, I know there's some people, one guy was on CNBC this morning saying we're going to new all-time highs, by the end of the fourth quarter. And he actually put a target of 3,400 on the S&P, which I think is insanity. But, there's people out there that, obviously are very bullish still. I think the real reality is, we look like we're getting on top of this. We look like exactly what I'm just repeating what I was saying yesterday. We look like we're getting on top of it. The numbers themselves overnight actually weren't even that great, but the apex is probably closer than maybe this late April targets that a lot of people were thinking about. So that's why the market rallied. But now the question is, okay, we're still in a world of trouble, really, when you think about it from a normal perspective. I mean, COVID is still out there. Do we just reopen everything? I'm sure Nick Shaheen's going to come on. He was saying that 2 weeks ago, just to reopen everything. I think it's a mistake to do that, because I think then all of a sudden you start to see a lot more people die, and I value deaths more than, or I value lives more than the economy. So it's difficult to really say how to get this really reopened safely. And, that's what what politicians got to figure out.
Yep.
So just to put some numbers behind this.
Yeah, let's do it.
So we've talked about how the market seems to be driven by the new deaths, particularly in New York. So there was 599 deaths reported yesterday in the state of New York. That brings the statewide death total to approximately 4,700. It's the second day in a row that the New York State death toll has hovered around that 600 level. So it seems to have plateaued, at least temporarily. New cases in the state yesterday, we know it's more of a lagging indicator. 8,000 new cases confirmed yesterday, bringing the statewide total to 130,000. Across the U.S., though, while the death toll was plateauing in New York, there was over 1,200 new deaths reported yesterday across the country. Okay, a lot of that in Georgia and Louisiana. Okay, there are also 30,000 new cases confirmed yesterday. So there are now almost there are almost 11,000 deaths in the U.S. and 336,000 cases in the U.S. So the death toll in New York plateaued for a couple of days.
Yeah.
It's still going up across the country. That's why I don't really understand why everyone's feeling so optimistic. Because
I think it was just classic short squeeze. So you got to separate it a little bit from fundamentals. The rally yesterday, it started as a health rally, and then it turned into a full-on short squeeze and some panic buying. People saying, I don't want to miss it. I've been waiting so long. I'm going to miss it. I think you're going to get, I don't know if you're going to retest the lows. Maybe the low, obviously say the low is in, the temporary low is in. It's obvious. People are coming as the low end. The low's in. I mean, the low, maybe not the low of the whole year, but, we're going to take a lot of work to get back down to that lows. It would take a lot of bad news to get down back to that 220 SPY low. A lot of bad news. So the low is in, at least for now. And so now it's a matter of, do we get a pullback back into that 250 congestion area, 255 congestion area to reload some stocks? I think you eventually do. And that's why I'm not going to panic buy in my portfolio here. Like I said, I will pick on stocks. And you know what? You're going to get an opportunity, I believe, this earnings season. You're going to see some stocks that report some bad numbers get slammed by the news algo. Those will be opportunities to buy, in my opinion, because we know the expectations for a lot of companies are going to be low. We had a lot of companies even pre-reporting last night, or at least giving guidance, and none of them were good. But none of them are really getting hit hard. So that's a consideration. I think that's going to be the way that I'm going to try to rebuild some of my portfolio, is maybe picking on some of the earnings stocks that potentially get hit and buying the dip. Classic, buy the dip is back. So with that all being said, we still have a lot of issues. So like you're citing, Spencer, we're not at the apex in the rest of the country. We might be getting close to New York, but the rest of the country was not self-quarantining nearly as fast as New York was. And there's a lot of pain ahead. So I think there is going to be more dips. Right now, you're still in a squeeze mode, though.
And also now on, you saw it last week, right? We got hit, and it was like, okay, 2,400. I want to see 2,400. 2,410 at that point was halfway back of the rally. I think everyone was like, I was waiting for that. I'm like, this is the test. This is the test. And you know what? You had 3 pokes at it, and it didn't get there. And then, of course, we turned things around, Sunday night. So you get 500-600 points off the low. It's just, and I've talked about this before. The deck, when I used to hold the deck on the floor, they would, the market would go down and it would clear out all the buys and all the sell stops. Right.
Yeah.
And then so there'd be nothing on the downside of your deck. And then on the top, it'd be above, it would be sells and buy stops. And then the farther the market went down, the bigger the deck would form on the upside. And what you're doing now is you're clearing out the deck, man. You're clearing out the, people that bought this for intermediate trades. You're stopping people out on buys. So now you cleared out the top of the deck. Now the bottom of the deck is going to reform. And that's, that's how, you develop the feel from for the market. And it's classic. The market will go where it can inflict the most pain on the most amount of people most of the time.
Absolutely. And that's what we're seeing right now is people who are banking that we're retesting the lows. I was in that camp. 2 days ago. But you know what? You've got to be able to change your opinion quickly as a trader and be able to get out when you're on the wrong side of the trade. I mean, I was in that camp so much that I had overnight short swings on, short SPY, flat out short SPY, thinking that, I don't see really the catalyst to drive us higher here overnight. And this was, on Friday. And I'm like, I'm comfortable being short over the weekend. And then I looked at the numbers on Sunday. I was like, I'm in trouble. I even tweeted out. I was like, I'm tweeting against my own position because I tweeted out at 4 o'clock before the futures open. And I asked our followers a question, which I was obviously implying that I think we're going to see a flattening the curve rally. And we started seeing it. We opened up 30 S&P handles, and we've never looked back since.
What did you have, like a 247? You covered it like 259 or something like that?
No, I actually got on that really good. I shorted that early in the day Friday. And I was 4 points, and I shorted over 249 and a half, I think, on SPY. And I was 4 points. So it was 245 at one time. So I was actually doing really well in that short. And I was like, I'm holding this. And we had a ridiculous rally right at the end of the day on the imbalances on Friday. And I was like, no, I'm going to hold through the weekend here because I don't see the catalyst take us higher. And I was wrong. And I'm looking at this position. I'm like, I need to find a way out of this trouble. And, obviously, I've got to admit that I'm wrong. And that was a great, people think you lose money. It's a bad trade. That was a great trade. It was a great trade. I only lost, 8 points. Right now, I would be down on that 21 points 2 days later. That was a great trade. I literally was dead wrong. And I minimized my damage to only 30% of the possible damage here right now. Plus, I turned around and started actually buying stocks and somehow made the trading day green, which I don't even know how the hell I did that. I was just, I had good trading. Like I said, I trade better, and I don't often pat myself on the back on the show. But, I trade better when I'm in trouble, when I'm on the wrong side. I think I see clearer somehow. I've always been a risk manager. I've always, probably my issue has always been, I'm very good at getting in the trade, not that good at getting out of trades. I've always said my exits suck. I get out way too soon. We've joked, Alex on Twitter calls me FIFO. It's totally true. First in, first out. But I'm very good at identifying. This is why I've been in business 20 years. I'm very good at identifying when I'm in trouble. And then I can turn around and, through the years of experience, I don't mind flipping my position. So I turn around and actually start buying stocks. And, and that's, why I ended up having a pretty good day.
Hey, Dennis, do you have like an alarm that goes off in the trade cave when you need to start reversing course and just
in my head?
Yeah, but
an alarm in my head.
Okay. But there's no
how about, and I just we'll get into individual stocks here in a second, but we were doing the show late in the day yesterday, and we were just waiting for the imbalances. And I blinked, okay? The low of the 15 or the 351 bracket was 26.37. The high of the 1552 bracket was 26.57.75. And that's a minute. I bet you they did that in, I don't know, 5 seconds, 10 seconds. I don't know if if I could get anything. But you saw that blast, right, Dennis? Were you kind of braced for it? That was right when the imbalances came out. 21 handle bracket.
The imbalances are moving stocks, and we talked about this on the show yesterday with
Jonathan Corpina.
With Jonathan Corpina, and we knew that was happening. We talked about why that was happening because the floor brokers aren't there to, first of all, provide liquidity at the last second, but secondly, at 350, they're not getting any early looks. So the market doesn't have that information priced in like it normally does. So it's a big difference.
Okay. You want to cover?
Yeah, let's talk about the one stock that actually does have some fundamental basis for its rally here, and that's Carnival Cruise Lines. A 8.2% stake from the Saudi sovereign wealth fund that was disclosed yesterday morning here. So CCL has a new stake from the Saudis, so that's presumably a nice vote of confidence there.
Dennis, you want to comment on
I've
this?
got 3 trades. Just hang on.
Oh, go,
you guys
no,
run
no,
with it for a
okay,
sec.
let me do it.
Sometimes in this environment, like it's crazy environment, I've got a trade going on. I'm trying to work out of here right now.
All right,
So
okay,
different.
no, that's fine. I can,
It's on a preferred stock. I'm not going to talk about it, but
Okay. Well, I mean, they obviously think the bottom is in here. Very, very, very good day yesterday. We had a close on Friday at 8:49. You went to 10:21. Big vote of confidence there. Back up, tested the low. If you were so inclined, this thing had a low at 790, and you got to look at it on last week at 780, popping up in a pre-market here, trading up $1.79 at 12 even. Let me get to the intraday chart. I can give you the intraday high or the pre-market high, and then you can use that as a target. It's just hovering up here. It's the high is 12.27. We're currently trading at $12, so you want to see follow through that pre-market high, and your next day. Ooh, that coincides with your high from April Fool's Day at 12.61. So pretty good level for you there. Recent high after that was 14.55. So pick some different areas. I also like to look at closes, and you had 2 closes flanking the $13 level, 12.80 and 13.17. So nice 2-day move here in Carnival Cruise Lines. Let's look at Royal Caribbean. I'm sure they're moving in sympathy with it. That's up $5 at 34.70. Looks like it still has some more room to go here, continuing to make new highs on the pre-market session. What do we got? A daily high? A couple targets for you here. 35.65 was your high on March 31st. That's $1 away. And then it opens up to 37.53. That's your March 27th high. And then the other cruise line, NCLH, Norwegian, same chart. I mean, they're all looking the same here.
dash for trash. It is. It's the dash. Yesterday was a dash for trash. It continues here this morning. I mean, do you want to know?
Do you want to know some of the stocks at the top of my up filter here?
All the garbage.
SeaWorld, Cinemark, the theater chain, Bloomin' Brands, Spirit Airlines, Six Flags. Oh my God, Six Flags is that up 15% this morning?
Yes.
Market maybe.
Yeah, I'll look at mine too. Same.
Dave and Buster's, Denny's, Red Robin, MGM.
Yep.
I mean, Wynn, Nordstrom, Avis Budget Group. I mean,
and then a bunch of those small REITs, like the ones that are all still probably going out of business, but they're getting the relief pop, like MITT. You know, that thing's trading up 25% here this morning. That's what you're seeing. It's the classic dash for trash. I mean, this is what happens when the markets, look like they're turning. If that stuff's going to rally the most, the stuff that's been absolutely murdered. But really, when you put it in perspective, like, you look at, where these stocks are and where they were, I mean, this is a nothing rally because stock prices are so low. And NCLH rally, that you're talking about, up 17%, looks awesome, the person that bought it yesterday. But if you just bought it 5 days ago or 7 days ago at 20, it doesn't look that great. So that's where we're at.
Let's look at Wayfair here. Ticker Vault in the YouTube chat asked us to look at this one. They rallied off their guidance headline on Monday morning. Was it Monday morning? Yeah, I believe it was Monday morning. That they're going to beat their guidance. A lot of people, I guess, went out and bought office furniture online. Ticker Vault in the YouTube chat is noting that they have a 60 million share float. Short interest has always been higher on this one. He's saying it's 30% of the float, which would be very high. I don't know what it is exactly, but that sounds right to me based on what I know of their short interest in the past. So it's a popular stock among shorts, and they've gotten their faces ripped off here in the last couple of days.
All right, nice move here. Nice pop. We're going to make a look at yesterday's high, up 250. I just would keep an eye on that for continuation. 76.47 was your high from yesterday. We haven't taken that out. Very important to take that out and continue higher. Things open up after that to 81, 82, but I don't know if it has the gas to get there today. But I would just I would keep an eye on that high from yesterday from a technical perspective.
We talked about that 80 level being huge. It's not coincidental that it stalled out a little bit below that. Didn't quite get up to the 80, 76, 47, but I agree with Joel. I think even if you get up over it, $80 is going to start to become a factor there. I mean, this thing was $20 3 weeks ago. Like, let's get some perspective here. If you're coming and buying this at 80, you're doing it backwards, in my opinion. You know, these are rallies. And let's talk about this overall. If you've been in this market, and there's been a lot of people who have been very, very, very nervous about this market and, you know, maybe getting spanked. Like, we went straight down in March with not much, you know, of a bounce at all. You know, obviously we had a few little bounces in there, but, you know, if you were sitting there and eating a 30% loss in your overall portfolio, you're getting half of the losses back here really in the last, you know, 2 weeks, but the majority of it here in the last 2 days. So if you ever wanted to lighten up, the market's giving you an opportunity to lighten up. So I was already lightened up, so I'm not going to lighten up into this as much probably, but because I'm already pretty light in my long-term portfolio. But if you're nervous about stocks going forward and you're nervous about the market going forward, man, this is giving you a nice opportunity to lighten up. I don't know where we go from here. Maybe we can eventually go back to all-time highs. I mean, we'll get a cure, changes everything. We probably could. I think that's the only way we get back to all-time highs is if there's a full-on cure. Like there's like a therapy that just absolutely works and nobody's dying anymore. I think that's really, or the death rate drops substantially. But I think there's, you know, also the possibility that this could still be ugly for a while and we don't know how to get out of it. So I think it's not a bad opportunity if you're nervous about your portfolio to be lightening up into some of these rallies.
That's what makes a market.
Yeah. It all depends on your own situation. I mean, but there was definitely some people who probably were too long for their own personal situation coming in. I mean, this market's been going straight up for how long, Joel? And, you know, and all of a sudden, you know, you get a 30% whoosh, not out of nowhere, but it caught a lot of people very much by surprise. We know that. So when you come and look at it now, you think, okay, well, you got half those losses back. We're all about, I love, you know, what we said in our technical analysis book, Joel. Support, resistance, and trends, and 50% retracements. Isn't that what we say our first 4 pages are if we ever wrote that book?
Yeah.
That might be the only 4 pages in my technical analysis book. Those are the 4 things that I use. And you know what? That 50% retracement is going to come into play here once again.
It gives you, you know, it's in between the fib numbers and stuff. And it gives you, you know, when something, you know, looks like it turns, you know, it gives you like something to look for and a level that you could play it up to. Or if, you know, if you're long, it could give you, you know, a potential exit. And then, you know, the same way, if it busts through, you know, then you'll recoup the whole move. So there's a lot of different things that you use on that. 828. I mean, considering how crazy this market's been, we're really quiet here, Dennis. Quiet before the storm. We hit a high. See how long we've been on the show here for a half hour, and our range. We started at 8 o'clock. We had a high of we haven't even had a 10-point range during the last 30 minutes. Now, you know, that's going to change when the real liquidity comes in here. But just hanging out up 74.25 handles. Crude did come down and try to nick the low of the session, but now back up 45 cents. I think for you crude traders there, kind of hard to be shorted. You know, with the Saudis and the Russians talking and the potential intervention there. But 26 closed down at that area yesterday, 26.08, and I got a weekly level there at 26 as well. So good to go north in crude as long as you're holding $26.
What about some of these names that maybe aren't, or I guess are bucking the trend here? We talked about Teladoc yesterday, and Dennis kind of pinpointed Teladoc and Zoom as the two, I guess, like the ground zero for the uncorrelated or the inversely correlated marketplace here, as it seems to be. Those two.
Sorry to cut you off.
You know, I was like,
you paused for a second. I thought you wanted me to jump in.
I mean, I half paused there.
Dennis doesn't need much of a pause.
No, yeah. But those two are sort of driving the inverse train here.
Yeah. The coronavirus, classic stocks, and that trade was coming off with a significant rally. Not surprising. I will say this Zoom thing, obviously, you know, the hangover on this thing is the investigation that's going on into how they're handling the privacy, and, you know, as some of these videos being exposed, that's a wild card for it. I will say you have major support down that $100 area. So you got down there yesterday to 108, couldn't quite get down there, bounced significantly. Now I would use that 108. You pull back 110, 111, 112. I think some people want to back up and buy Zoom. I'd be more of a buyer of pullbacks now on Zoom, because I think that trade, you know, valuations, forget about it. You can't look at none of these things from valuation right now. But, you know, if the market starts to sell off again, Zoom could start to show some life. So it's just basically, when you're buying Zoom, you're betting on a market fall here as of late anyways. And then Teladoc, same story. It fell yesterday, got that one right. Obviously I made some money with the two, shorting it after the show was done. I'd say yesterday's low, though, 143.07, probably got some support there now too. So I trade those two together. I mean, Teladoc hasn't had the fall that Zoom had, but it also isn't under investigation for how they're handling privacy either. So some other factors involved there.
Zoom had a downgrade yesterday too.
And that didn't help. And it was a big one to underweight. So, I mean, valuations never made sense. This isn't going in my long-term investment portfolio at all. But for trading, I love trading Zoom. You know, I trade Zoom lots of days because it's got that nice move where some people aren't paying attention. And like I said, it's been moving counter to the market. So just like Teladoc yesterday, you get a chance to short Teladoc. It was trading 151, 152 the entire pre-market. With Zoom trading down, I was like, eventually it might follow suit. What happened? It opened and went straight down. So there's, you know, some trades in there where you just got to understand correlations and relationships. And relationships are constantly evolving. Some relationships are eternal. I mean, you know, you look at risk arb situations, different relationships are just there. They're very, you know, well spelled out. E-Trade, Morgan Stanley is risk arb. That's a relationship that, you know, isn't going to be changing anytime soon unless the deal falls apart. But when you look at Teladoc, Zoom, right now, as of late, there's been a relationship that they move negatively with the market. So that's a tradable relationship. It's a relationship that every algo hasn't identified. So when you can identify relationships that the algos aren't trading, there's opportunity there.
All right, 8:32. A little bump up here, 27.22. We got a few minutes before Nick Shaheen comes on, author of Create Income with Option Spreads. He'll be talking about his strategies over the last week and how he'll be approaching the markets today. What about these airlines, Dennis? You know, not getting a little bump today, but American Airlines up $1.21. Delta recovered from the war in sell. I mean, these are just hanging out near their lows here. I guess getting a little bit of a pop. Delta's up 260.
So I have a lot of thoughts here, and these would have been up substantially yesterday if not for the Warren Buffett sales that went on. Obviously, he sold a portion of his shares. That got major media attention, and that kept the stocks down on a day that everything was dashing for trash. Well, that's yesterday's news. Today, we continue the dash for trash, and that's why they're buying the airlines all of a sudden too. So it gave you an opportunity. We talked about the LUV level saying $30, and look at that low yesterday. It kissed $30, and now it's at 34. So I didn't have the guts to get in there and get down and dirty. But I tell you, a lot of these, you know, airlines were, when a dash for trash was coming in, if you had the guts yesterday, you would have made some money buying, you know, on the dip yesterday. And then obviously if you held overnight, you're making substantially amount of money here this morning. We don't know what a bailout's going to look like for these things. We do know that most of the airlines are potentially going to need one, unless, you know, maybe this all turns around and we get out of lockdown the next week. But I don't think anybody's jumping in to board a plane right away. And Delta says they're burning $50 million a day. So they need a bailout, probably do. So we don't know what that looks like, and that's the uncertainty of jumping into these. You know, if a bailout looks okay, if they give them some nice terms, if it's more just like a loan, a temporary loan that they're going to pay back when we get out of this thing, then that's okay. If it's got some dilution in it, that's where the shares are going to have trouble. So we don't know what that looks like. I'm staying away from the airlines personally, but I'm not surprised they're bouncing, and they could bounce some more. So I wouldn't want to be short them either.
Something
staying away.
Something worth considering on the airlines, or at least on Buffett and his transactions regarding the airlines here, is his stake in Delta and I believe Southwest too, both of them are now below the 10% threshold, which means he doesn't have to report when he sells until 13 45 days after the end of the quarter.
Yeah, good point.
So he's free if he
do
wants.
Whatever he wants right now.
I mean, not that he couldn't do it before, but he would have had to disclose it.
We would know
imminently.
within 2 days.
Right. We would know. He's free to liquidate his entire stakes, and we won't know until 45 days after the end of, I guess this is the second quarter. So 45 days from the end of Q2, which is that's what, August? So he could do
the
that
airlines
now.
are going to be a lot different price by August.
Right, right, exactly.
So we're not going to know much for more unless he comes on CNBC and tells us what he's doing, which sometimes he talks to Becky quick. Becky's pretty good at getting that information out of him. So maybe, Becky can get on there and get some information out of her. But
yeah. So unless he's going to come in and bail him out, I don't expect to hear from Warren on the airlines anytime soon. Let's bring on our guest here, Nick Shaheen. As we mentioned, he's the author of Create Income with Option Spreads. Joins us every other week to give us his view on the market and talk about some trades he's been making and share some charts with us. Nick, good morning.
Good morning to you guys. I never noticed the wall behind you, Spence. That's outstanding.
Oh, thanks.
Did we get a new sign today?
We did it. We do have a new sign today. I would be glad to. Joe already asked me to explain it. I would be glad.
Free Joe Exotic, is that it?
I'd be glad to explain what that means.
Explain this one because I don't get it.
What?
Oh man!
Am I supposed to get this one, Nick?
I didn't either.
What?
Nick, explain it. If Nick gets it, I'm impressed that Nick gets this. Explain this, please.
Well, Joe, it's a tiger show, a show about the king of tigers, I guess, and it's a saga between some hick, who is a fantastic personality who's in jail now.
Yeah. Okay. So here's how I'll describe it. The show is called Tiger King. It's on Netflix. Someone in the chat asked us about Netflix and what we think about it. Based on this show, I would buy Netflix. I mean, it's the most watched show on Netflix every day for the last 2 weeks running. It's a 7-part documentary series, true crime, about 2 private zoo owners who own a lot of exotic cats, tigers, lions, etc. One private zoo owner in Florida may or may not have killed their spouse, and the other one is in Oklahoma. He's currently in jail. And those are the 2 principal characters
for conspiring to kill her.
For conspiring to kill the other one. So those are the 2 principal characters in this true crime documentary. And you really need to watch it. And
there's not a lot of teeth combined, so.
There's a lot of meth mouth in this show, as they call it. Anyway, the Free Joe Exotic. I don't mean that seriously, but really, if you haven't watched that show, there's not much else to do. Just watch it. It's pretty funny. Nick, what do you think about this market here and the rally we've been having?
So it's a lot of technicals, and for a couple of things that I like is that a few things are going back to quote normal, and the VIX is trending lower. Although I don't expect it to fall. We just had 10 million people file for unemployment claims in the U.S., but it is trending lower even on bad days of the market. A couple of days ago, we had a red day, and the VIX was red too. And the other thing is that the open interest is being respected a little bit. I expected a pop towards 2,700 because of what the open interest was telling me in the SPX and the SPY. And it worked. I mean, we're in it right now. So that makes sense. So we're back to kind of getting price action that I would expect under normal circumstances. We're not back to normal. And we do have room to rally even more, maybe even to the high 2,800s, because we're in a zone to where we are at a ledge. So it starts from like 2770. We should be in resistance, but it can go to 2880 or so.
So to you, is this like a pure technical rally? Is that how you're doing it?
You know how it goes. They overshoot one way and then the other. The rally to the peak when we had the virus going was kind of crazy. The fall from it was even crazier. Somewhere in the middle lies the truth. So we're trying to lessen that pendulum swing. I mean, you guys nail it on almost everything you say here, and it's all the same concept. They overshoot one way or another. Like the love for Zoom was insane, and the hate for it is going to probably overshoot lower. I just posted, I heard your comments, and I agree with you on the level side, Dennis, on Zoom.
Yep.
But if it loses the recent low, it may trigger some sort of a huge head and shoulders that could target the 80s.
Yeah, so that's true too.
As long as they hold that, I'm okay with it, but don't be in love with it because it's like 3 or 4 times more expensive than CR. It's like a very expensive.
100%.
I don't
I'd
look
say-
for value in those stocks, but when it's more expensive than the expensive stuff, then it
Yeah.
becomes like a
Yeah, the trade, and that's why this will not touch my long-term investment portfolio. Like I've said for Zoom the whole time, the valuation has never made any sense. And I mean, there is definitely competition here. I mean, Zoom is an awesome product. We use it every day, but Cisco's got a product.
Ring
Microsoft
Central.
has a Google
Ring Central
Hangouts.
has
There's a lot of potential competition here.
Yeah.
So definitely low barriers to entry. We'll say that much. So but as a trade, I like it down there in that 100 level because I think if you got down there the first time, maybe you got to bounce.
Yeah, on the first flash low, I even said to my guys in the chat and gals, and I said it's a buying opportunity, and they traded it for a trade, and they bought it and sold it at the top. They said, "Well, do I hang on to it?" I was like, anytime I get a gift like this, 10-20% in hours, I'm out.
Same thing. I mean, you got it in this environment. You can get some crazy gifts. I mean, people who are buying stocks Friday night or Friday afternoon.
Well, we did that.
Have 20% gifts in a lot of different stocks here all of a sudden.
But you said that you get out early, right? I did.
I always
too.
do. I suck.
Friday, I said I like the cues. There was a flash pop to 190. I'm buying that call. Sure enough, on Monday morning, it's like gift. Holy cow! So turned a small bet into a big profit. But I got out not at the top. Definitely, I missed the top. But I did what I always do, and I will do it again. I'm okay leaving money on the table. But if you saw some clues here and there, and you didn't bet on with the flow, then you're doing better than somebody who's just following the flow, listening to the news, because it's misleading. Like the data on the virus is getting worse. You know me.
That's what I'm saying. That's what I'm saying.
It is.
I track this table and I throw it into my own Excel spreadsheet. They change the columns every day. What the hell's going on with these people? So I track it into my own spreadsheet. The death rate went from 1.3 to almost 3 in the US. We went from losing 35 a day people to 140 a day. So the data is getting worse, but maybe we're getting it in arrears, like it's a delay kind of a thing. So on the front line, they think they might be getting a better handle on it, but on the table, it's not getting any better.
I think this was just a big time squeeze here from the last couple of days. I said it earlier on the show. I don't know if you were listening, Nick, but I was even, over the weekend, I had been short this market and we were consolidating. I was like, I think it might be consolidation to eventually retest those lows. Yeah. And then we had the New York data numbers that weren't that bad. And this market loves a silver lining. Right. You can see 1,000 people die, but they're like, but the death rate's going, and it's not as high as it was. So we're seeing improvement here in the hospitalizations. We're seeing a little improvement here. It's funny how this market just finds a reason, to, look at those numbers that look really, really bad, the data, but they'll spin it that, it's not that bad.
Yeah, but if you chart it, the necklines work, the supports lines work. So if you're trading more on charts than news, you would make fewer mistakes. I have especially in periods like that, because it's emotional. Everybody's emotionally invested.
It depends on your style. I've never been able to. So and obviously Nick's a chartist and I'm a news guy. So we're two different animals. That's why we butt heads. Me and Nick butt heads sometimes. Because I'm a headline guy and he's a chart guy, and we butt heads sometimes. I mean, trade what works for you. Headlines work for me.
That's what I'm saying. You're not the typical investor. Most people don't do what you do, and there's no way they're going to succeed if they chase the news. Oh, okay, the news says it's safe to buy. Then you missed it. You're buying somebody else's profits, almost guaranteed. So if you don't, here's my thought about the charts. I'm a fundamental investor. I use the charts as timing instrument, like an advisor, because I don't do anything about the charts. So if you're trading fundamentals, not for 15, 20 years, because that's an easy bet to make for good companies. But if you're trading within the next 2 years and you're not using charts, you're leaving yourself at a disadvantage to the opponent. You say, what opponent? Well, anytime you're making a trade, there's the other side of that trade that thinks you're an idiot. So they might have more tools than you. So if you don't have the charts as a tool, then you're leaving yourself vulnerable to what they know and you don't. So that's the only reason why I use the charts, and they work. It's a self-fulfilling prophecy. Machines are trading. They don't trade without charts. So
Nick, how would you trade the SPY here?
Okay, so the SPY is, it all depends on your time frame. Are you a short-term trader? Are you a mid-term trader? What are you looking for? So if I can give you my chart and I tell you where, so if you look back at a tick in March 13th area, 11th through the 13th, we fell off a cliff and it's just above us. So if I were to pick points of exit, 271 would be a place I definitely would not start longs, because it's a ledge from the 13th and a couple of days prior to that. I'll share a chart which has tons of lines, but you can pick those two out of it. If you look back, it's like a sharp reversal. So that's a technical way of saying, when do I not start longs? I don't start longs anywhere near that. I would rather see them take it out and then chase it higher from there. So that would be one thing how I would do the SPYs, for example. The same concept goes through all of them.
That is a lot of lines there. Well, I'm trying to
Yeah,
make sense
but
of this.
ignore. But listen, these are lines that I share every day with my team. So every day
Right.
I have a plan. So I tend to change colors in order to make it easy to see what that day happened. But then I delete them after the fact. But
Okay.
there's towards the left, there's a spike that failed on the 13th. So just after the yellow lines end, the volume bars, and
Yeah.
it's like a sharp green reversal. That is a top I need to respect. And if you look a little bit to the left, it's a ledge where we gap down from it. So it's not going to be butter going through that. It's not going to be easy. They're going to hit it, fade, fight over it, and maybe get up over it. And after that, they can rally a little bit more. That's why I draw the yellow line. I say follow the yellow brick road here. And basically, if it goes along those ways, I don't know which way it's going to go, but if it crosses that line, I know it's going to carry in that direction to that point, if it can.
Are you looking at a close? Are you looking at an hourly? I mean,
This is a 60-minute chart. So every bar is 1 hour. And it's, when I see a breakout, if it's an intraday breakout, I share it as an alert. And I say, if you're fast enough to trade it, some people use the futures, some people use the Qs or the SPY itself. So everybody trades it differently and at different speeds. That's not my style. I don't want to do this. I want to catch the falling knives like I said I would. AMD falling, I sold puts and shared it. BA falling to 90 was a blind buy. I started early, I doubled down as it hits the bottom. Easiest trade. Shorting the VIX at the highs, easy. So I'd rather do the boring trades like this. But this stuff works on any time frame. That's why I said, what's your time frame? Because you can apply the same logic on any time frame you want.
we're at a loss for words. That doesn't happen very often here.
Okay,
Nick,
so
Nick,
wait.
Let's
No,
take.
Go ahead. Now we're all talking.
Okay,
Yeah,
so,
okay. So everybody stop talking.
okay.
And now my alarms are going off.
I'll show you the SPX. I shared it with my buddies here in a chat before we broke down. And I said, if we are drawing a right-hand shoulder, this will happen. They go, ooh, scary. Well, guess what? It happened and then some. So it's not, I didn't see it coming, but I knew that once we lost a level, that it was a possibility. Hey, Joe, you saw it coming. You sent me an email, say, how do I trade this? So you must be like rolling in dough right now because you saw it coming.
It's just a feel, it's a feel. And just trying to do the levels and trying to, look at things in a longer term perspective that you helped me with. I will tell you, you did kind of save me on Friday, and because I did had a nice lead on some puts, and I was kept on thinking we're going to see 2,400, we're going to see 2,400, we're going to see 2,400, but just it was even after the S&P, the stocks closed, I sold the lower strike, and I locked in the profit that I had, and then some of it was gone obviously in the morning, and I just ate it, but. Being on the sell side of those options, man, I'm telling you, that can save your butt sometimes. So
with the VIX this high, selling makes more sense than buying. So if I'm buying something, I would use spreads. If you're playing options and you're buying something for a hopium rally or a hopium breakdown, well, even if it goes in your way, sometimes the VIX movements will affect your profits tremendously. I'll give you the opposite example. I bought VIX put spreads. And the VIX spiked bazillion to its high. I made money. How is that possible? Because the explosion in implied volatility throughout the whole basket made it so that my puts were gaining as the VIX was rallying to highs. It was insane. That's why I said I was making money on the VIX short on days that our VIX is up and days that our VIX is down. So using the spreads works because then you're buying one expensive and you're selling one expensive, then you're not paying up a premium. So whereas if you're selling a put, it makes more sense than selling a put spread.
Nick, what about these airlines here? I
Yeah.
mean, the cheap call options here. I mean, I think a lot of people are looking at them and saying, "Hey, the market's running, where things are going to get back to normal." Just one person I talked to yesterday, I just tried to look like who was best in breed before that, and I kind of think Delta has been a pretty good performer. The news with Mr. Buffett didn't help any looks. Any thoughts on the airlines?
Okay, so as far as the Buffett move, we don't know what his intentions are.
Correct.
And the impression is what bothered me most is that he sold his Delta. He did not sell his Delta. He reduced his position to a degree that we don't know why. And so now speculation comes out. He can do whatever he wants. He can double down and nobody would know until after the fact. He can do whatever he wants. So anyway, as far as the stock itself, I pulled up a monthly chart because that's really the only way you can look at these. They've fallen so much. So my impression is the day Trump came out and said, we will help Boeing, that was the day I said, sell puts in Boeing, because there's no way going into an election year, we're going to let our airlines fail. That is my impression. So if I want to bet on the airlines, I didn't like the airlines before, but for a trade, if I wanted to bet on the airlines, I would plug my nose and commit long-term, whether that is buying the stock itself and selling some calls along the way, or buying a leap call spread. I would probably do than just straight up call, for the same reason I told you I'm paying up. There are no cheap calls. The VIX is over 40. So there's nothing cheap in the options. So everything is inflated. So I would, don't do everything all at once. We don't know. This is a chart that is horrendous. And usually when they punish something this badly, they have a reason with such conviction. So I'm definitely not going with the flow here. So it would be a plug your nose, because nothing makes sense at this point.
That's a good one. And nothing makes sense at this point. Nick Shaheen is the author of Create Income with Option Spreads and sellspreads.com. Joins the show every other Tuesday to talk about what trades he's making and what he's seeing in the market. Nick, thanks for the time. We'll talk to you in a couple of weeks. Stay safe.
Appreciate it. Looking forward. Yep, definitely.
As always, stay safe. Most important thing to end every interview with these days.
Yep.
Stay safe. All right. 8:52 here, guys. About 8 minutes left in the show. Want to get to some questions from the chat. Before we get to that, though, Joel, just what are you seeing out there? Just same old rally?
We've had a really quiet range here during the show. We've been as low as 28.17. So, just got to go to the playbook here and look for that, follow through for that pre-market high. Take out that 27.45. You have a daily level above that. We've been talking about the 50%. Maybe everyone's expectation that it's going to get there today. It might take a day or two. Also, coming back on the downside, it's really hard. I mean, to find a lower risk long here, I mean, I'm looking under 2,700, maybe 26.85, but seems a long ways away now. Dennis, how are those imbalances looking?
To the buy side mostly, and so it's showing what that should be showing. So I don't see any reason that we're going to pull back here at all. Significant across the board. You want some highlights? Visa's got 119,000 to sell. Projected open 178 here right now. The projected openings are always tough. Those move. That's a moving target. They're all a moving target, but the imbalances give you a pretty good look. I mean, just looking across the board, I see hundreds of thousands on everything. AT&T 535,000 to buy. Bank of America 496,000 to buy. Ford 1.1 million to buy, GE 791,000 to buy, Disney 260,000 to buy. You just look across Berkshire Hathaway 108,000 to buy, ExxonMobil 519,000 to buy. It's across the board strength here. I mean, oil's barely up, but you look at these oil stocks and they're ripping. The stocks are trading with the stocks. I mean, even yesterday when we saw a little bit of weakness in oil, a lot of your oil stocks were still up, because the influence of the S&Ps is more influential than even the oil price right now. When the stocks are, when SPY is up 3%, most stocks are going to be higher. I'm looking at my screen right now. The only thing I see red is a few gold stocks because gold is trading down, but even them, the GDX overall is still trading higher. So
I got gold up, Dennis. I got gold up 940 here.
GLD is trading down. So that would be on the settle though from where it was.
Okay.
So that's why, I don't buy futures quotes because again, as a prop trader, they try to charge me $800 a month for it. So I don't pay for that. I got the GLD down $1.22. So that would be from settle from 4 o'clock. So I don't have to do any fair value adjustments into that number. So it's a pure number. So $1.22 down is where GLD is relative to close. Silver's trading higher though. It's buy and balances just across board. General Motors, 247,000 to buy. Again, the dash for trash here is happening. Stocks that have been hit the hardest are the ones that are rallying the most here this morning.
We should talk about 3M here. Haven't talked about them since last week. They've reached a deal with the federal government. They're going to supply face masks and respirators. Going to import 166.5 million respirators over the next 3 months. They're also going to be making 55.5 million face masks each month here. So let's look at 3M here as it relates to the past few days.
Getting some love from the Trump press conference when they announced that. Props to Dow Jones. They broke that before Trump announced it on the press conference that they got the deal. And the stock popped up and it's continuing to pop here this morning. I'd actually be a seller of this pop because 3M lower beta stock, 3M a little bit defensive. I don't think it's up 5.37% here right now. I think when we look at this, I think it'll still be up, but if you're a day trader right now, I personally would be selling it. I think the stock could end up giving back half of those gains because this is just, it's a pop off the press conference, a pop off Trump. People are like all excited, but let's just think about the relationships, and that's going to move more with a Procter and Gamble. That's going to move more, with some of your XLP components because it's more defensive. So if you look, XLP and you chart MMM, they're very close to each other. Well, XLP is up like 1% here this morning. So, well, actually, I guess it's up 2%. But 3M being up 5.5%, I feel is overdone.
Okay, S&P's creeping back up here, back in the 2730 handle. Haven't talked much ratings. Is there? We did talk about.
I didn't even look.
We don't even look anymore because the stocks.
I don't even know what ratings
the
there
stocks
are
that are downgraded will be up, and the stocks that are upgraded are going to be up. It's because those stocks are
The stocks that are downgraded are going to be up.
Oh yeah, they will be. I get Hilton downgraded here today. I guarantee you it's higher. I haven't even brought up Hilton up 9% downgraded. Doesn't matter. All that matters right now is dash for trash. People aren't even looking at ratings right now.
There were a lot of downgrades
crazy
today.
Out of the blue, like the Zoom one from yesterday. There was a ton of downgrades. Like some people, Citigroup, holy cow, Citi, what are they doing? They must be getting bearish here all of a sudden.
There's a
Citi's
lot
selling
of
the bounce.
There's a lot of downgrades.
Citi looks like they downgraded 20 stocks.
Citi downgraded a few. Let's see, a lot of REITs. I see some oil, and
mostly REITs.
There's like 50 downgrades today.
Show them. Can you show the Benzinga Pro? Get an opportunity.
Yeah.
Let's promote our product a little bit. I even talked about it in the chat there for a second. We don't ever pump our product enough, but bring up the Benzinga Pro. Just show the sea of downgrades here.
This is all just today. So just to get
so they're selling the bounce.
Show the upgrades.
That's not a bad call.
There's like 20 upgrades there, 15 upgrades. How we scroll down? How many downgrades are there?
Downgrades.
Yeah, just way
a few.
more red.
Just a
few.
And look how many Citi just littering it. Citi RBC's there.
Yep.
You know what though? They're selling the bounce. This is the way you're supposed to do it. I props to the Citi call here. They waited for the bounce to downgrade everything, and they're downgrading it all now.
Oh wow! Holy.
Just a few, Joel.
just a couple.
Now you guys trying to get me super bullish now. Don't do that.
Joel's got the bull hat on. I think both me and Joel are nervous about this 50% level.
Yeah, I mean, let's go. Let's get there today and see what happens, right? Up 88.
It's possible it could get there today.
Yeah, it's possible. And you know what? It also, we've been having some pretty big average daily ranges. So that fits in the average daily range too. So just a question if you get a little dip to buy before that happens, or we'll see. But 27.45, that's the number the spoos are giving us overnight for follow through to the upside.
I like what RJ just said in the YouTube chat. FOMO is a virus. It is true. FOMO is a virus, and the
Oh.
only person it kills is you.
Actually,
there's a fear of missing out here happening for sure. It's a bit of a squeeze and a bit of FOMO. You are right. There is people who are chasing this rally. I think if you're chasing this rally, I think you're going to be on the wrong side eventually. You might get rewarded.
Eventually is the key word. There's eventually.
Yeah, well, no. I mean, people are sticking these investment portfolios because they think we're never going down again. We're just going to go straight up to all-time highs. I don't think that's the case. I think we'll get back. I think we will eventually. I don't think we're getting to those lows. Unless the crisis worsens dramatically. Like people start getting reinfected. That would be real bad. But if this crisis obviously is going to be going on for a while, I think you're going to get a chance in 250 to 260 SPY again. I do think that 245 to 255. That was a big area of congestion. I think we'll come back down eventually. Maybe in the next week or two we get some bad headlines, bring us back down there. I don't think we're going straight up to 300. Some people are going straight up to 300. I don't think so. I'm at this point not chasing further. I was chasing a bit yesterday. At this point, I'm not chasing.
Before we wrap up the show, are you guys ready for a new word that I cannot take credit for?
What do you got?
A
Okay.
word?
You invented a word?
A
word that you learned?
A buddy of mine that I lived with in college and grew up in Monroe with, Rob Holman, he says he is now referring to people who are disregarding social distancing and other common sense advice as COVIDiots.
Oh, I saw that in Twitter.
Oh, you did?
I saw that on Twitter too.
COVIDiots.
I saw that too.
All right.
COVIDiots. Oh, see, so out of this crisis, we got a new word.
Yep. So wrap things up, Spence.
So does the Georgia governor fall into that category since he reopened all the beaches in Georgia?
And that's what annoys me is because if you look at the number of new deaths yesterday, Georgia was a hotspot. Georgia led the country.
I cannot believe that.
In new deaths yesterday.
So if you weren't following the story over the weekend, it was a mandatory order to reopen the beaches in Georgia.
No. Back up a day. One day. It was an order to close everything, and then the very next day, order to reopen the beaches.
And there's a mayor in one of the beach towns that doesn't want to reopen. Literally is there.
A lot of them don't want to reopen, quite frankly.
Well, why? I mean, there's obvious reasons we don't want to reopen the beaches. This was the same governor. Sorry, Georgia, but this was the same governor that just found out that asymptomatic people can spread it.
I don't know if he just found that out.
He said it on the call.
I know that's what he said. He said it in the press conference. I don't know.
He said it on the press conference. Oh, I didn't. So news to me.
I know that's what he said. I don't know. No one knows really what
I'm probably going to get some hate mail because people probably love this governor, but
maybe
let's get more informed, Mr. Governor.
I don't know what he really
That's a
knew,
bad thing to say.
But it is what he said. That was a bad thing to say. You're right. All right. Let's wrap it up here. I want to thank our guest, Nick Shaheen. You can always catch the replay of the show on YouTube or catch the podcast on whatever podcast platform you prefer, whether it be iTunes, SoundCloud, Spotify, Stitcher, etc. Catch a free trial and a subsequent discount to Benzinga Pro by clicking on the link in the description of this video. That's our real-time news platform. Please remember all the information from our show is meant to be used as informational purposes, not for investing or trading advice. Joel and I will be back with you at 3:40. In the meantime, everyone have a great rest of your day and stay safe wherever you are.